You have Karnataka Bank also that's come out with their earnings. And if you look at the NII, it's coming higher by about 1.4% on a year-on-year basis at around 834 crore rupees. You've seen the PAT also seeing an uptick, and the NPA or the asset quality has seen its stark improvement when you talk about it on a quarter-on-quarter basis. So let's get the management on board. We have Mr. Sri Krishnan H, who's the MD at Karnataka Bank, joining us this morning. A very good morning to you, sir. Thank you so much for joining us in ET Now. And looking at your trend, looking at the trend, basically your yield on loans has been in a downward trend, while the cost of fund has been actually seeing a rise over the last few quarters. So has this impacted your NII in the quarter gone by, and how are you actually planning to change the scenario?
So good morning, and thanks for the opportunity. We've had a stable quarter, and specifically on the two questions that you had, which is on the loan yield. The loan yield currently for this quarter has come down by about close to 20 odd bips, but that is not a permanent situation, because this is a very temporary blips because of the change and a churn in the portfolio. We have had a large chunk of PSU and other short-term assets that we've been putting on at a lower rate, and this quarter we chose not to. So we chose to do profitability and quality rather than having to do quantity. So that is one of the reasons that, we have not grown our balance sheet in this quarter, but it's a very conscious call. The second is we are replacing them with direct to corporate assets. Basically, we have a corporate team which has been put in place, which was not the case in the bank earlier. This is part of the transformation study and the transformation exercise that we have undertaken, and a huge effort here. So we are well on track as far as the asset growth is concerned. The second good news on the asset side is that retail we've been growing, and we have actually booked about additional 1,300 crores net addition into the book this quarter. So that engine and this corporate engine, if the both of them actually kick off, we would be back on track as far as the asset growth is concerned, and also the loan yield. On the deposit side, liabilities, yes, the whole market has been facing this, so we are no exception to this. Having said that, we do have a very strong liability franchise. We did not choose to actually bid for very high cost deposits and bulk deposits, and which is why our bulk deposit is less than 8%. 92% of our deposit is actually retail in nature. We believe that between CASA and retail term deposit and the sales organization that we have put in place, we will be in a position to grow this. We also have a lot of government business where we collect taxes, we collect GST, we collect customs duty. We are also integrated to the Karnataka government for Khajane 2 Treasury for collection of all kinds of fees, so on, challans and so on online. And this is something which will kick off and which will also have a good kind of a flow from a current and a float perspective. So overall, I think, this is a quarter where we took a pause. We wanted to strategize, and then we have done that. But the quality part of the book is something that we are focused on. And as you mentioned earlier in the commentary, where the NPA, the slippages, everything has come down. Recoveries are also very high compared to the last few quarters. So overall, the quality of the book has increased, and it is much better than before, and we are on a very, very clear trend there. The restructured assets and the overall GNPA percentage has come down also compared to quarter on quarter and year on year. So we are having a very stable kind of a situation, and from here, all our strategies and our transformation exercises will start really kicking in, and which is where we will see the change in the trajectory.
How are you managing the pressure which every bank is facing in terms of liabilities? How are you ensuring that your liabilities don't go away?
We have actually maintained the liabilities. We have maintained the CASA, and compared to the market where the rates went a little better, we did not participate. Despite that, we did not lose the deposit. So we have a very strong franchise because of the 920 branches, the retail part of it. And as I said, there are no bulk, deposit there. That's one. So there is continuity. Karnataka Bank is a 100-year-old bank. So basically all our relationships transcends across generations. So which means that, there are 2-3 generations of families and businesses which have been with us. So the loyalty factor to the bank is very, very high. So we will continue to capitalize on that and actually deliver superior service and digitized service to those customers, which is why we believe that, we are on a strong wicket. our liability franchise, both from the float, what I mentioned earlier, and the regular CASA, current account, savings account, and everything related to the retail term deposit is the focus, and we will be doing this. We have deployed a separate sales team right now, which was not the case earlier. So we used to have only branch-led acquisitions. Now the sales organization has started functioning well, and we also have a new leader for that. We also have a new leader for the retail asset side. So these are all some very clear one-time decisions that we needed to make, and all have been completed, including the technology and infrastructure and the products to be put in place for the retail bank.
You mentioned that you're getting some advantage from the state government, and one is getting a sense that a lot of business for central and nationalized banks is coming to regional state-owned banks. Is that a trend in making? Is that something which could move the needle for you?
Empanelment from which is approved by RBI, and where we have to integrate with the CBDT, with the Customs Department, and with the GST for collection, both online as well as offline, is something that we have done over the last 1 year. Similarly, in Karnataka government, the treasury is actually centralized, and this is the Khajane project, as they call. Now we have integrated to the Khajane 2, which means that as a bank, we are in a position to collect the challans and all fees that are due to the government from the public. So what happens here is that customers and non-customers can actually log in and pay. So basically, this is arrangement which is possible because of our presence and deep roots in Karnataka. And second is that it's not necessarily restricted to Karnataka. Other state governments also we are now breaking through. So both the central and Karnataka state, we have already become online. But we will also go to the other states, as I mentioned.
What about fee-based income? Could you give us a sense as to how are you ensuring that your fee-based income remains strong?
Our third-party product distribution on insurance investment is actually showing a very, very good traction. So in fact, we might end up even close to doubling of what we were last year. But there are other areas like foreign exchange trade, etc., where the product is being built. And this was not done earlier because we did not really focus on corporate banking, mid-sized corporate or large-sized corporates. So here now, because of the balance sheet size, which is now reasonably big, because of our capital adequacy, which is very comfortable, we raised capital last year. We believe that we can get into larger corporate relationship and cross-sell of products. So the product penetration on foreign exchange trade will help for the fee to asset ratio to be much better. The last part is that we have our regular retail income, which is debit card charges or whether it is locker rental, etc., which are growing. So overall, the other income part has shown a positive trend. As all of you are aware, that treasury income cannot be accounted for in the other income because of the RBI circular, and this is across all banks from April 1. So this is all gone to the AFS reserve. So as and when the securities get sold is when the P&L benefit will be derived. So as a result of that, compared to the last year, the entire treasury income, which otherwise, this quarter we could have taken 71 crores if we had gone as per the last year accounting principles. But this has changed, and which is also the other reason that the other income has come down. But the overall fact is that it is lying in a reserve. And as and when we actually have a sale of those securities, we'll be able to book the P&L. So it is not like the mark-to-market method that was adopted earlier. And so these are the various contributors to the fee income. And I think, we are on the good track. We need to increase the cross-sell, which has been our focus from the branches and the service teams.
All right, point taken, and all the best for that and the future. Thank you so much, sir, for joining us on the show and talking about the quarter gone by for Karnataka Bank and how you are expecting the way forward for the bank. So that was the management of Karnataka Bank. But
there comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.